I just started recording. There's 2 minutes to go. So yeah, I'm just gonna start with an odd CAD, but before we start the odd CAD, we're just gonna start the basics of what I do, what it's called, what it is, and stuff like that. Yeah, let me just open. Let me open two charts so that you can see something. I use our trading view for my analysis because it has different brokers where you can view the chart. Different brokers have different details. This is just basically a 4-hour, right? Let's just go to odd CAD here. Okay, yeah. You see this one? This is from an IDC chart. I'll show you another one in a Saxo broker. Here's I don't know, should start showing something. Okay, oh fuck that. Let's go to odd JPY. I drew something on this and it wasn't valid because of the chart. Let's go to the monthly. Okay, let's look for that chart. I have that. Yeah. I think I just deleted that thing. I don't know why, but yeah, I was just trying to show you that different charts have different you see starting points. In this chart here, it's a Saxo chart. You see Saxo here? It shows detail all the way up until 2003. I like IDC charts because they have more detail. Let's go to an IDC chart. Odd USD. You see, this one goes all the way up until, look at it, 1975. So you have more detailing of what is currently happening in the market, what is likely to happen, what market structure chart pattern it's following, and all that. Unlike the other one started all the way down here. So in this case, you could think that this is maybe, let's say, an uptrend type of chart. When it's just a downtrend, you see it just created a whole 1, 2, 3. I'll show you all these things. I'm just starting off. It's just the beginning, just trying to show you different charts. Look for mostly charts with more detailing so that you can actually get the market structure and understand what is happening. So anyway, let's just get started now. Odd CAD. Yes. So basically, my strategy, I call it ELLiMODO. It's just a basic mixture of Elliott wave and Quasimodo. I don't know even if I'm allowed to be saying Quasimodo in these videos because I don't know who created that, but apparently it's Mansu Sapari. But yeah, man. I'm not really good at QML, but I've understood what QML is to Elliott wave. So I basically take the QML concepts and principles and add them together with the Elliott wave principle, and then I get proper entries, know which QMLs to enter, and all these type of things. So I'll just show you the first basic principle of finding the market structure and how the market structure looks like, what the market structure is, and everything like that. In any price, anywhere, in any time frame, there's excuse me for chewing. Let me spit that out. Yeah, in the market structure, price has a supply and demand, right? In any time frame where price is currently at, it has a supply, there's a demand. So in this case, I'm just gonna draw a basic supply and demand of, let's say, whatever a price would be doing at this current time in the market. We always have in a market structure what Elliott wave, some guy called Ralph something, Elliott, yeah, something like that. This guy discovered that the market moves in a 5 wave-like pattern. And then within this 5 wave like pattern, it has 3 impulse waves and then 2 correction waves. I'll just show you the impulse waves and all the correction waves. They just have 5 structures, and then I'll show you also the corrections. Yes, it starts like a 0 at the bottom, always at the bottom of wherever price is, at the bottom of wherever the price basically started, really started. That's our 0. And the next impulse movement, which would be somewhere here, would be our 1. This would be our 2. This would be our 3. It would be our 4, and then maybe our 5. Now let me just add waves to that. Let's make them bigger. This is how price moves. In other books where people show you these things, they'll call these things like try add some shapes. I usually have something like this. They'll call that like I think major trend, and then it would have something like this is a correction, A, B, C. And then we'll write down all the principles and everything. Maybe just draw these things for you so that you can see them. And then here they'll call this. Let's just do that. They'll call that a minor trend. Yeah. In other books, they call these things that way. I don't know if you have read QML books and all these type of things. People ask me why I do this. Basically, I just study these things so that I could give people for free. I know it's very expensive to pay mentors. I've paid mentors. I buy some of these things so that I can give other people for free that can't really afford mentors and stuff like that. I don't know if that's a good thing or a bad thing. Either way, I just do it. But yeah, this is basically how the market moves. Let's remove these shapes. These shapes. Yeah, in Elliott wave, this is how the market is. It has a 1. This is the first impulse wave. It has a 2. 2 is the correction of 1, as a correction of 1. And then we have a 3, which is also an impulse wave. This is a correction impulse. Let's write that down. Just hold on. Can I do something, guys? This thing, I can't connect. So I think sorry for that. Yeah, back to this impulse. Yes. Okay, let's just put it at the end here. But yeah, this one is for this here. This is for this. So When price moves all the way to this top one, uh, it repeats itself. This is why I say price is it's just doing repeated patterns, stuff that it has done before. So it'll create the same wave-like patterns that look exactly like this big one, but inside here. In this case, it creates something like this. Let me show you. Okay, let me just do that first. And then let's reduce the size of that first. Let's make it black. Yes. Let's put that over there first. Yes, this is how price moves. It'll do something like this again, and then inside here again, it'll do another ABC. Let's do ABC. Let's make that black again. Reduce its size. Okay, let's just go on. Sorry. Create that, and that. It'll create this whole big structure inside this little one. Also inside here, it's gonna create let's just do that. It'll create something like that inside here again. Sorry for moving that one. 2, 5, and then that again. It creates all these types of structures. That's how the market moves. It's not exactly like this, but it's something like this. And then now let's get to the principles of doing all these things, counting all these 1, 2, 3, 4, 5s and everything. We just don't basically draw them. There's principles to drawing these things. We know wave 1 is a certain level, and then wave 2 corrects a certain level of wave 1. Wave 3 is a certain level. Wave 4 corrects a certain level of wave 4. For you to determine, this is basically for like an uptrend. This is how you know it's an uptrend. At the bottom of this 5 here, would call that now our big one. And let's say whatever market, yeah, we'll say that is our 1. 1, 2, 3, 4, 5s give us a 1 here. ABC give us a 2. 1, 2, 3, 4, 5 again here give us this 3. ABC would give us this 4. Another 1, 2, 3, 4, 5 would give us this 5. ABC would give us a 2 here. Get a 2 here. Is everyone getting me? Am I too fast? If you're getting me, you can hit the chart. If you want me to repeat something, you could hit the chart again. So yeah, let's do this impulse. Yeah, correction here. Please repeat. Okay. Should I repeat everything again? I'll start writing down the principles again so that you can okay, in fact, let me write it down. Yeah, let's do this. And 5 waves. Yes. In Elliott wave, we have five waves. Let me put an S there, excuse me. Five waves. And then within these five waves, we have three impulse and then two correction waves. 1, 2, 3. 1, 2. Is that clear? That's the market structure. Basically, this is how the market moves. This is a market structure. This is basically it. Within these market structures, when a QML drawer sees something, in this case here, you'll probably see a QML there. In this case here, you'll see a QML there. In this case, you'll see a QML somewhere there. Again, there's an ABC correction there. You'll see another, okay, let me do this first. QML draw again, we'll see maybe an upside down QML here. A QML all the way here again, upside down QML there. All these weird things. Maybe here, someone will see probably, when we get here, there's something called a fake out V3 diamond. In this case, in this QML, it'll always fail. This QML will never be valid. I always pick this QML because you're an Elliott wave drawer, so you can basically pick which QML is going to work, which one is not, and stuff like that. Usually creates a fake out V3 around this, so people take that and say QML is coming. We're going to enter here. Comes there, just goes all the way to that top. So yeah, this is what basically my drawings would look like in my charts. This is the market structure. This is what it does when it's in a trend. Let's say if this was, let's say, an uptrend, it would correct like this all the way to this 2, and then it's going to a 3. It will do something like a 1 here, this big 1, and then it will do this 2 here, and then this whole 3 here. It's going all the way up there again, and it's going to create a 4, and then it's going to create a 5, all the way to that 5, ABC correction, up until it changes direction. In this case, let's say it was doing all these things here, and then the C decides to come and break past this. This meeting will end in 10 minutes. Oh shit, upgrade now to remove the 40-minute limit. Okay, I think I'll upgrade, just hold on. But yeah, anyway, and it goes all the way to the bottom here. When it goes to the bottom, it'll distort maybe this uptrend. It'll mean that maybe the market has changed direction to go to a downtrend. So basically, when you are an Elliott wave trader, you can know when price is going now all the way down, you know when it's going up and stuff like that. So yeah, has everybody understood what I have said? Or if you need me to repeat again, I don't mind repeating. You can just hit me up, I could repeat. Chat section, are we clear? This is just basically the market structure. This is how the market moves. A 1, a 2. Okay, let me see the chart. We are good. Okay, if you're good, then okay, that's sweet. Now let's get to the principles of this, of counting these waves. Yeah, text. Wave, we're getting to how we know this is a wave 2, how maybe we know this and that, this and that. In this case, wave 2 is always 50 to 70% of wave 1 using the fib retracement tool, and then wave 4 is 30 to 50% of the principle that says if wave 2 is deep, wave 4 is shallow. We can do that. Then if wave 4 is deep, wave 2 is shallow. Yeah, then we have this principle. This is for the correction waves, so that you can be able to measure and know where price is likely to return, what zones you can mark as maybe your demand zone or your supply zone. Yes. I think my music is disturbing, right? Yeah. Anyway, yeah. Uh, if wave 2, if this, in this case, if this is a deep correction, we likely to have maybe a shallow correction here. If in this case, this is a shallow correction, let's say wave 2, let's do that. If wave 2 is, fuck, excuse my language, but if wave 2 is shallow, we expect wave 4 to be a slight deep correction. That's how basically Elliott wave moves. Sometimes it doesn't even follow this principle of 30. If this is just deep, it also goes another deep correction again. But yeah, you mark the zones where price is likely to retest, because we are not trying to tell the market what to do, but we're just trying to wait the market to react at certain zones so that we can enter and make money. Yeah, so basically, yeah. In this case, let me see. In this case, let's say we'll be measuring. If we were to measure, should I delete everything here now? Have you all seen everything that's here? Do you need to write something down? Should I screenshot this and save it somewhere? Then you guys can see it also. Let me just screenshot this. Hmm. Okay, that's acting up. Let's just do it. Okay. I'll send it to you guys somehow. Okay, yeah, definitely. I think the chat is gonna disappear in some time, or I'm gonna leave the chat room. I don't know. Automatically, I think, yeah. So yeah, when we drawing now the corrections, 2, 3, 4, 5. We use for us to measure the correction levels, we use a Fibonacci retracement. As I said, wave 2 is 50% or to 70%. Would use this tool, bottom point of the start of the trend, all the way to the top of wave 1. There's 1 here, all the way to that 0 there. And then you measure. If price returns, you mark these zones. You usually take that, mark that as probably your first retracement point. The first retracement though is at the A, which is a decision point. In this case, the decision point is always around here. This is the first reaction from, let's say, when price starts correcting. It'll come down like, in this case, oh no, not in 1, 2. It'll do that. It'll bounce off that and create a B there, and then create a C. Up here, it'll be creating a QML for people. It'll create that QML entry because inside here there's 1, 2, 3, 4, 5. That 3 that'll be bouncing off here will give us that 4 as a low here. A is always at this point, so it's going to give us A as our lower low, and that's our high, and then it's just an entry. And then you know where price is likely to retest the 50, the 60, all the way to the 70%. So you mark, I like my take profit here first, around these zones, and also somewhere around there also. So you mark the zone, you know, that's your last take profit, and then you wait for price to see what it's doing, if it's retesting here, or it would like to go all the way down here, and then it'll take something down here as a bottom QML. Bottom QM will be happening here also. There's a bottom QM that can happen also here. So it can take this one and go there. But in this case, you'd have taken your profit. And all you do now is just wait for price to tell you what to do so that you can enter, have a sweet entry. Let's just remove everything again. Yeah, if you don't get it, just ask a question. Okay, that was just a thank you. Okay. Yeah. So it retraces this much, and then you take this Fibonacci tool again. When we measure the retracement of 4, we take this again from bottom point of this one all the way to the 3, check 70%, 50%, or 60%. This one always depends on the depth of this one. If this was shallow, maybe if it did that, then we expect this maybe to do something that deep. But this can never surpass this. If 4 goes into this, it becomes an invalidation. We'd have to recount our waves and see maybe where we were wrong. 4 can never surpass the start of wave 2. It's always inside of this. It's always like this in the market structure. In this case, you'd pick something here, bottom QML entry, we're going up there. That's how it always works. If this surpasses this, it's invalid. Keep that in mind. Always keep that in mind. In this case, retracement of this, we are looking for that is probably, let's say, a 50. Just can we just basically randomly drawing on all these things. You'd get your 50% here. Okay, 50%. Then we going to this 5. This 5 is a whole big one. This 5, you measure it as a whole big thing. So you'd start here all the way to this top thing. We're looking for, it's going to do an A. First A would be, yes, here at the decision points here, and then we're going there all the way to the 60. We know 60% zone. So we'd mark this area as our take profit, and then this is our first take profit again. And then we wait for this now proper QML that would probably be coming all the way. I think we'll be sure whether there's a QML coming because price needs to do an ABC correction. In this case, less than 1 minute left. Can we hold on? Let's just wait for it to be done so that we can restart again. I don't know how I'm going to get your connections, but let me give you my number so that maybe you guys could add me on WhatsApp. And I can just send you guys. Oopsie, I sent it privately.